What is up, guys? My name is Hassan and welcome back, everyone. Today is a very special day because you guys can see I have reached $25,000 in portfolio value. This is a big accomplishment for us because if you guys have reached, say, $1,000, $5,000, $25,000, or even $50,000 in portfolio value, this is a big landmark to celebrate, and it's a celebration towards our financial freedom because that is one of our goals. Move away from the dependence on money. We don't want to have to work for our money. We want our money coming in, and that way we can do bigger and better things. Like, for example, a person who makes only $50,000 in annual income, he heavily depends on those $50,000 because majority of his expense is taken up by $50,000 versus a person who makes $100,000. He'll maybe spend about $50,000 or $60,000, and rest of it he'll be able to spend. Rest of it he'll be able to save and invest in other things. He is not as much heavily dependent on versus a person who is dependent on his $50,000. So according to research, the ideal number to have is $75,000 in terms of annual income, and that way we're not too heavily reliant on our money. So this is definitely a big landmark for us to celebrate, for us to reach $25,000 in portfolio value. I'll show you guys an article from Washington Post. The average millennial has a net worth of $8,000. That is far less than the previous generation, which is very problematic. According to the Washington Post, millennials are doing far worse financially than the generations before them, with student loans, rising rents, higher costs of healthcare, pushing the average net worth below $8,000, which is very problematic, as I said before, because as an investor, as an individual, we should definitely have more than $8,000 of net worth. So if our net worth is below that, we can definitely do better. And if you guys are watching this channel, definitely you guys are in the right direction in terms of investing and saving your wealth and budgeting. I pray that your health and wealth is increased more than you can imagine. So we're going to go back to our Robinhood portfolio. Today I'm going to show you guys my portfolio and the unique companies that I have, my dividends that I received, my monthly tracking sheet, and how to be a better investor. As always, before I begin, make sure you guys check out the disclaimer in the description below in terms of investing, because it is really important that we do not blindly follow people that we don't know for financial advice. At the end of the day, we need to hold ourselves accountable. Like, for example, say I buy a company. For some reason, I do my analysis, I buy the company, but few years down the line, I need this money to buy a house. So just because I sell the company, does that mean you're going to sell it? It's foolish. So it's really important that you disclaimer below and hold yourself accountable for every single investment you make. So this is my Robinhood portfolio. We can see that for one day, I'm down about $16 or 0.07%. And then if we look at it for 1 week, I'm up about $229 or almost 1%. If we look at it for our 1 month, I'm up only $70 or 0.2%. So another thing that I want to point out is that as being a dividend investor, even though for the last 1 month my portfolio was relatively flat, but I still had the dividends coming in month after month or on a weekly basis or day after day whenever they're scheduled for their payment. For 3 months, I'm up about 11%, which is a nice gain right here. And then we look at it for 1 year, I'm up about 14%, which is amazing. If I can get 14% every year, I'll take it and run, because average return for the S&P 500 or in the general market is around 10%. So if I can get 14% year after year, I'll take that and run with it. $3,000 that I received, it's not fully accurate because I also received 3% in annual dividend. This income or this portfolio value of $3,000 of cash income that came in, it does not reflect the true value because it does not show my dividends. It just shows dividends as added money. So it's actually higher than this $3,000 that I received. Another thing that I want to point out here for the 3 months that we can see here, that the market went up nicely for 3 long months, and then we had a major pullback, because this is very normal. In the stock market, stock never really goes straight up and never really comes straight down. So they always move in a cyclical pattern. So in the last 3 months, the companies or the stock market generally went up heavily. That's why we had this pullback. So it is really important that we always have some kind of cash ready to deploy back into market whenever we have these downturns of, say, we have around 17 and then we went down to 11. So 6-7% it went down, and this is a major pullback that we've been waiting for because it went straight up. And this is where, as a smart investor, we need to capitalize. Just remember, stock never goes straight up, never comes straight down. It goes in a cyclical pattern. And then if you take a look at my portfolio on the right, majority of them have one thing in common. They all pay a dividend. So I'm going to show you guys some of my holdings right here. So we can see AMD, Kirkland, Baozong, Texas Instrument, Waste Management, Johnson & Johnson, 3M. One thing that I want to point out is that currently I have around 34 or 35 different companies. And if we go here to show our total return, majority of my companies, around 80 to 85% of my companies, they're actually in the green or they do well. So that is one of the benefits of being a long-term investor, that as you hold on to stocks or the companies for a certain amount of time, you'll eventually go in the green as long as it is a solid company. So I want to point out, you can see here, the majority of them, 80 to 85% of them is green. We have a red here, Pembina Pipeline. I'm down 256. They're all, majority of them are in the green. And then we keep scrolling down. Pfizer, Cisco, MMP, but majority of them, National Instrument, $8, I'm in the green. Another thing that I want to point out is that this is my 11th year investing in the stock market, and in the long run, we have been doing well. So guys, if you guys made it this far, make sure you guys like and subscribe to the channel. It helps my channel grow and it helps me reach out to more people, and that way we can all benefit. Remember, in the stock market, we are all in the same team. Now I want to show you guys my Robinhood monthly dividend tracking sheet. We can see here on a month-to-month, I track the amount of passive income that I receive on a monthly basis. We can see here, January I received $19, February $25, March $51, April $27, May $34. So last time I recorded a video, I showed you guys my May payment. Now I'm going to add my June payment. So for the month of June, I received $55.79. So this is the money I did not have to work for. This, by being a dividend investor, they actually gave me this as a shareholder. And then for the month of July, got $25.03. The reason why July is lower than the other months is because on July, usually companies don't pay out dividends on that month. Majority of the companies out there in the stock market usually pay during, say, March and June, around those months. So in July, they pay. Usually, they're just paying less. And then for the month of August, I received $33.80. My trend line here shows where I should be around. So by August, it showed that I should be around $40. And if we look here on my average for the last 6 months, I'm at $38.09. I'm very close to $40. I'm not there yet, but for my average payment, I'm almost at $40. And this is one of the nice things about having a trend line. Like, for example, if I add September, we can see here another month has been added, and it increases my trend line, because as the months go, my dividend portfolio or my income should be increasing. Update this so I'm averaging around almost $40 a month. In total payment for the last year and a half, I received $471. And this is money that I did not have to work for. This is passive income, which is the opposite of active income. Normally, active income, I have to work for it and get paid. But passive income, even if I don't work, I still get paid through my dividends. So another thing that I want to point out, that if you guys have been following my portfolio, I have 2 portfolios. I have one is M1 Finance, another one I have Robinhood Portfolio. So for my month of August, for my M1 Finance, I received $19.52. And then for my Robinhood, you guys can see I got $33.80. So if we get a total of $53.32 for the month of August, which I receive. With this money, I can pretty much pay my bills or pay a phone bill or do things I like to do with money that I did not even have to work for. Another thing that you guys should always make one of these charts, because the stock market or your Robinhood portfolio is a pool of companies that are put together. So imagine having a company or a pool of companies without having an accountant. So this chart right here is like Excel sheet that represents my income coming in and going out. So it's really important that you guys make one of these charts. And it is also important that you guys have a basic understanding of how Excel works. So if you guys don't know that, how to use Excel, just Google it, how to make one of these charts, watch it on YouTube, and it will show you how to make these simple charts with a 2 X and Y columns and how that transforms into a chart. If you guys want me to show you guys how to make these, just let me know in the comments below and I'll show you guys how to make one of these charts. Another thing that I want to point out is that one of the key differences between the rich and the working class is that once the working class, they stop working, they do not get paid. But however, when the rich, they stop working, they still get these monthly dividends coming in through either businesses, dividend income, or even real estate. So it's really important that we are investing towards our financial freedom. In order to invest, we need to have money. And how we're going to have money? By budgeting. So the next thing I want to show you guys, we're going to scroll down. I'm going to show you guys my budget or some of my bills that have been paying for the month of August. So let's just make this a little bit bigger so we can see. So this is my monthly expense. So here I have electricity for the month of August around $70, gas bill for my house $25, internet $45, and my cell phone, which is a family plan, is around $84. So we can see that for the month of August, I paid $224. Yes, I do have rent payment, I do have car payment, but one of my goals as an investor is to supplement my income through these dividend income. So eventually I want to live partially off of my dividend income. That's why I want to have my dividends pay for my gas, electric, internet, and cell phone. So currently my expenses are $224. As we seen earlier, for the month of August, I made about $53.32. So we're going to do a little simple equation, 224 minus 53, and it shows that I'm at negative $170. So currently I'm not able to live off my dividends because my expense is a lot higher than the dividends coming. But eventually, as this chart continues to grow month after month, I'll be able to break even and then even go surplus. So we can see here at one point in December, I was down around, my expense was at a negative 205, 190, 150, 104. It's going down, going up. Eventually, if I continue this trend, it should go down to 0 and I'm able to live off some of my bills using my dividend payments. Pro tip I'm going to give you guys is that make sure you guys have a budget, and this budget actually has to be written down. It can be in Excel on a loose leaf, it can be on a tissue paper. As long as you're able to visually see how much money you're investing and how much money you're spending, it'll actually help you be a better investor and get your budget organized. Another thing, if you're married, you guys want to make sure have a monthly meeting where you and your wife, you guys sit down together and have these budgeting meetings on how much you spend and how much you're looking to spend, have a forecast, and that way you guys are both on the same page and towards reaching your own financial freedom. So it's really important on a monthly basis that you guys sit down together and have a budgeting meeting for your house or family. So before I show you guys the rest of my holdings, I want to quickly show you guys the dividends. So here we can see my August dividends. Pets paid me $7.44. Colgate paid me 44 cents. Pembina Pipeline gave me $5.79. MMP $10, and Texas Instrument paid me $9. So for the month of August, I received 5 different payments. There's almost one a week, and we have a total of 5 different companies that paid me in 1 month. And this is only from my Robinhood portfolio. It's actually very motivating to see every time I get paid, I let my wife know, hey, look, I just got $7 today. Oh, look, I got $10 today. And this is money, remember, passive income. And by telling my wife, I'm actually motivating her in that way, so we have more passive income coming in. It can be through real estate, business, stocks, but one of the easiest way to invest your money is through the stock market. So before I show you guys the actual companies that pay these dividends and the amount of shares I have, let's take a quick general questions that the viewers have or people. So I actually forgot who this question was by. So the question that they're saying is that what percent value is considered a good average return each year on the stock market? And then they said 10%. More like a question, is 10% a great number to a return? Personally, I think that if you can get 10% return on your average return from the stock market, you are doing well, beyond well, because the average return for the S&P 500, we're going to pull it up. So we can see that the average return for the S&P 500 for the long run 10, 50, for the last 90 years or so, based on a couple of research, is that the S&P 500 has returned around, some say 8 and 9% without inflation, with inflation around 10% in return. So as an investor, if we can get 10% in the S&P 500, which is awesome. Most investors or most hedge fund managers or investors, they're not even able to beat the market. So if you can reach 10% a year, which is an amazing accomplishment. So now I want to pull out the compounding calculator. So say initial investment of $10,000, monthly contribution is 0, so we're not putting in. Average person starts investing around 25 and he invests until he's 65. So we're going to do 65 minus 25 is around 40. Estimated interest rate, we're going to say he's making around 10% annually, and we're going to calculate. We can see that after 40 years of investing only $10,000, you have reached $452,000 in portfolio value. So we can see how much that 10% can do for your $10,000 over 40 years. So in a humbly, if you look at my return for the last 11 years investing, on a humble way, I make at least 15% in annual return. Some years I make 30, some years I make 10, some people on less. But if I were to average it out, I make around 15% or at least 15%. A portfolio value around 50,000 currently, and then we're going to do a monthly small. Say we'll do $250 over, I'm 30 right now, so I'm going to retire at say 65 if I live that long. Hopefully I do. 30, so another 35 years, and then we're going to change this to 15%. We're going to show you guys our $50,000 over the long run becomes how much when I calculated this out. We see that after 35 years of investing for our $50,000, it becomes $9.3 million. If you can make 10 to 15% year average return, you will do really well. You'll be one step closer to your financial freedom. So it's really important that we continue to invest and we continue to add money and enjoying our life. So another thing that I want to point out is that Peter Lynch, one of the top investor out there, he invested for 13 years with Magellan Fund, and he had an average return around 29%, which is the best of the best. If we can get close to it, or 10-15%. To answer your question, what percent value is considered a good average return each year on the stock market? I'm saying that if you can make at least 10% a year, you are doing really well and you're on point. I pray that you continue to do well. So now we're going to go back to our portfolio, and I'm going to show you guys some of my holdings. So guys, if you made it this far, make sure you guys like and subscribe to support the channel. So hopefully you guys are able to hit the like button and subscribe to the channel. So I have AMD 34 shares, Kirkland 47, Baozong 52 shares, Texas 10 shares, Waste Management 12 shares, Johnson & Johnson 8 shares, and then we got 3M 7 shares, Pembina Pipeline 45 shares, Nvidia 2 shares, and then we got PET 31 shares, Cal 79 shares, Skyworks Solution 5 shares, Cantor Brand 28 shares, MPX 38 shares. I have Microsoft 3 shares, Gentex 22 shares, Pfizer 15 shares. One of the unique thing about my channel compared to all those other YouTubers is that I invest in unique companies that hardly anyone else is talking about, such as MPX or Gentex, Pfizer, or Escalade or MMP. These are solid companies that no one else or hardly anyone else is talking about. So it's really important that you continue to follow my channel to get these great companies. Remember, I'm not advising you to buy it. Remember, just because I buy something, that does not mean you should go buy it. Make sure you are able to hold yourself accountable. Remember, I'm not a financial advisor. And then we got Tapestry, Merrick, we have GPL, Broadcom, EMR, National Instrument, we got Rio, Garmin, GFI, MXIM, I got VFC, GPC, American Solution, and then High Crush, which went bankrupt. So majority of my companies, 80 to 85% of them does really well. As always, guys, make sure you guys hit the like button, hit the subscribe button. Thank you. See you next time.